How to Invest in Stocks for Beginners 2023. Are you looking to invest in stocks but don't know where to start? You're not alone. A lot of people are in the same boat. The good news is that it's not as difficult as you might think. You're probably familiar with stocks, even if you don't know exactly what they are. You might have heard the term market capitalization or seen a ticker symbol and wondered what it all meant. In this video, we are going to demystify stocks and teach you how to invest in them. Before we go ahead, please subscribe to Financial Freedom and hit the like button if you enjoyed the video. Let's get started. Overview of investing in stocks. When you're ready to start investing, the stock market is a good place to begin. But it's important to remember that stocks are a long-term investment and there is no guarantee that you'll make money on them. That being said, if you want to invest in stocks, there are a few things you should know. First, you need to understand what a stock is. A stock is a certificate that represents ownership in a company. When you buy stocks, you're buying a piece of the company. Second, you need to decide how much money you want to invest. Don't invest more than you can afford to lose. And remember, it's best to start small and gradually increase your investment as you learn more about the stock market. Third, you need to find a good broker. A broker is someone who helps you buy and sell stocks. There are a lot of brokers out there, so do your research before choosing one. And finally, be patient and don't panic if your stock loses value. The stock market goes up and down, and over the long term, it usually goes up. Let's understand each point deeply. Understand the basics of the stock market. When you're ready to start investing, it's important to first understand the basics of the stock market. That means learning about stocks, bonds, and indices, and getting a feel for how the market works. Stocks are shares in the company that represent a portion of its ownership. When you buy a stock, you're buying a piece of that company. The price of stock can go up and down, depending on how the market perceives the company's future prospects. Bonds are debt securities that are issued by the companies and the government to raise money. When you buy a bond, you're essentially lending money to that entity in exchange for periodic interest payments and the return of your principal when the bond matures. Indexes are measures of the performance of stocks or bonds from a particular market or region. There are many different indices, but some of the most well-known ones include the S&P 500 and the Dow Jones Industrial Average. What type of stocks should you invest in? Now that you know the basics of stock investing, it's time to start picking stocks. When you're starting out, it's important to invest in companies you understand. That doesn't mean you need to be an expert in every industry, but you should be able to explain what the company does and why it's a good investment. You can also invest in stocks based on your beliefs. If you believe in environmentalism, for example, you might invest in companies that have green initiatives. Or if you're passionate about technology, you might invest in companies that are at the forefront of innovation. There are a number of different factors you can consider when picking stocks, so watch your time and do your research. The most important thing is to choose stocks that fit your goals and beliefs. How to research and analyze stocks before buying. Now that you know how to set up a brokerage account and what type of order to place, it's time to learn how to research and analyze stocks before buying. There are two main types of analysis: fundamental analysis and technical analysis. Fundamental analysis looks at the company's financial statements to determine its value. Technical analysis, on the other hand, looks at chart patterns to predict future price movements. Most beginner investors start with fundamental analysis. To do this, you'll need to read company's financial statements, which you can find on its website or in its annual report, also called a 10K. When reading financial statements, you want to focus on three things: revenue, earnings, and cash flow. Revenue is the money a company brings in from its business operations. Earnings is a profit a company makes after subtracting expenses. And cash flow is the cash a company has on hand after paying its bills. You can also get an idea of a company's value by looking at its price to earnings ratio, PE ratio. This is simply the stock price divided by the earning per share, EPS. A low PE ratio means the stock is undervalued, while a high PE ratio means it's overvalued. Tips for successful investing in stocks. Here are a few tips to help you get started on the right foot. Do your research. This one is a no-brainer, but it's worth repeating. You need to know what you're buying before you invest. Read up on the company, the industry, and the overall market conditions. Have a plan. Once you've done your research, it's time to develop a plan. Decide how much you want to invest, what types of stocks you're interested in, and what your goals are. This will help you stay disciplined and avoid making impulsive decisions. Start small. If you're new to investing, it's best to start small and gradually increase your investment over time. This way, you can get a feel for a market without risking too much of your hard-earned money. Be patient. Stock prices can go up and down in the short term, but over a long term, they tend to trend upward. So don't get discouraged if your investments don't immediately skyrocket in value. Just sit tight and let your money grow over time. Introduction to stock trading strategies. When it comes to stock trading, there are a variety of strategies that you can use to make money. It's important to understand the different strategies and how they work before you start trading. One popular strategy is called day trading. This involves buying and selling stocks within the same day. This can be a good way to make money if you're able to buy low and sell high. Another strategy is called swing trading. This involves holding onto stocks for a period of time, usually a few days to a week, and selling them when they have increased in value. This is a good strategy if you're looking to make a quick profit. And finally, there's long-term investing. This involves buying stocks and holding onto them for an extended period of time, usually years. This is a good strategy if you're looking to build a wealth over time. These are just a few of the many stock trading strategies that you can use to make money. It's important to do your research and understand the risks before you start trading. Conclusion. Investing in stocks can be a great way to generate income and build wealth over time. However, it's important to remember that there are risks involved, and you could lose money if you're not careful. If you're thinking about investing in stocks, it's important to do your research and understand the basics before you get started. There are a few different ways to invest in stocks, and the approach you take will depend on your goals and tolerance for risk. If you're a beginner, you may want to start with the simple, low-risk strategy, like investing in a mutual funds or index fund. As you become more comfortable with investing, you can start to take on more risk by buying individual stocks. No matter what approach you take, it's important to monitor your investments carefully and be prepared to sell if the stock market starts to decline. By taking the time to learn about investing and staying disciplined, you'll be on your way to successful stock investing in no time. So if you're thinking to investing in stocks but you don't know how to get started, we hope this video has been helpful. If you enjoyed the video, then hit the like button and consider subscribing to Financial Freedom. And if you have any questions or suggestions, leave it in the comment section. Thanks for watching. See you in next video.